Business owners and self-employed folks out there, today we're going to dive into utilizing a bank statement loan and how that income is really calculated. Okay, so your bank deposits don't equal your qualifying income, and today we're going to dive in exactly how expense ratios change that math. Okay, I'm excited you guys are here today. It hits my heart that you guys are business owners because I grew up in a line of entrepreneurs. And my family and me included, we always had issues buying real estate, whether it's your primary home, second home, or an investment property, because we wrote off too much in taxes. So bank statement loans are perfect for people like yourself. And I have made other videos out there breaking down what a bank statement loan really is. Okay, so if you don't understand expense ratios on bank statement loans, this could be killing your buying power without realizing it. I'm also going to dive in and show you real investor guidelines that break down exactly how income is calculated using 20% or 50% expense ratios and really determine how much qualifying income is there. Everyone's financial situation is different, and we also have many different investors that have different guidelines regarding this. So keep that in mind. In the descriptions, feel free to set up a Calendly call or DM me on Instagram. I'll be able to put that information in the description below. So the reality of expense ratios, so essentially we take the total amount of eligible bank deposits and we average that over 12 to 24 months, depending on what you deposit and what eligible business income is coming in, okay? What lenders see is net qualifying income. So depending on your businesses, they're going to multiply those bank deposits, the eligible gross income, by an expense factor, okay? So the default expense factor is typically 50%, and this won't require any CPA letter or anything like that. It doesn't really go into what type of business. This is the default. So if your business is making enough income month over month and 50% expense ratio is after multiplying that expense ratio by your income is enough qualifying income to buy the home you desire, cool. There's a lot less documentation needed when we do use that default expense ratio. It really comes down to the type of business and if you could potentially get a CPA letter. So this is actually a breakdown of an investor we utilize for bank statement loans, and I'm going to go through both business and personal bank statements and the different options of expense ratios that we're able to utilize. So option A is that 50% expense factor. So typically we'll need if you're putting less than 15% down, you'll be required to utilize a 50% expense factor. We'll also need to verify that you, the business owner, have a minimum of 25% ownership. Any decreasing or negative ending balances will be addressed. This is kind of a no-go when it comes to bank statement loans, but as long as we can address it, it shouldn't be a big deal as long as you're continuously bringing in that income. Also, any seasonal trends your business might have will have to be taken into consideration as well. Option B for using this fixed expense ratio is a 20% expense ratio. So this will allow you to have more qualifying income because we're not essentially expensing as much of your business. Okay, so to be eligible for this, you have to be the sole owner and operator of the business. So no partners, no employees. It's typically for service businesses out there. Okay, so you have no cost of goods, no heavy equipment or machinery. And your business does not require office space that would incur rent. Okay, so people that own roofing companies, do plumbing work, electricians out there that own their business, this is a perfect business for you to utilize a 20% expense ratio. The second option here is a third-party expense ratio. So essentially we have a third party such as a CPA, tax attorney, or an enrolled agent that writes up what the expense ratio is. The minimum is 10%. However, just depending on your business, this third party will have to file your most recent business tax returns, audit the business financial statements, and review working papers provided you, the borrower, the business owner. The tax professional must also verify your ownership percentage in the business And to determine net income, as I mentioned previously, we take those bank deposits, the eligible bank deposits averaged over 12 to 24 months, then we will apply the expense ratio against that income to actually calculate qualifying income. And keep in mind, PTINs are ineligible for this. Understanding the two key ratios. So one, 20% expense ratio. This is applied to businesses with lower operating costs, which essentially means 80% of those deposits we calculate. Feel free to reach out to me, book a call. We can calculate your bank statement income within an hour. So it really means with a 20% expense ratio that 80% of your deposits count as qualifying income. So people with businesses such as professional services, consulting businesses, and that third one is digital services. So we can dive in kind of what type of business you have to see if you're eligible for this lower expense ratio to help you have more qualifying income to buy real estate. The second option is 50% expense ratio. This is the default with most investors we use, and this is applied to businesses with higher operating costs, businesses that have cost of goods, stuff like that. You know, I own a produce stand, so there's cost of goods there. They would utilize a 50% expense ratio against the gross income I have coming in through my bank statements. So this is really for retail operations, manufacturing, and inventory heavy businesses. So this investor specifically breaks down 80% qualifying income, essentially low expense businesses, okay? And then 50% is for the high expense businesses, as we just went over. For personal bank statements, okay, so 100% of business deposits in a personal account can be used. We essentially need you to provide the most recent 2 months of business statements to validate these deposits are from you, the borrower, and your specific business bank account, okay? So we're essentially only giving credit for transfers from this business, from your business, or receipt of payroll from this business, and distributions only. So for this, you have to own at least 20% of the business. Option 2 is personal bank statements with no business account. Bank statements with no business account for non-service businesses that are able to be considered as business bank statements with the appropriate expense factor. So either 20% service business or 50% service businesses will be applied. Okay, so deposits from self-employed businesses only will be included into this bank statement calculation. And we must, you must also show a trend of repeated expenses not reported on credit report, may need additional explanation, and may be considered a liability. So keep that in mind. And with this option, we need you to own at least a minimum of 25% of the business. What this means for your loan. So it really, for you to set yourself up to utilize a bank statement loan, you got to really understand which expense ratio applies to your business. And it's ultimately imperative when we're calculating the actual qualifying income for your loan. As I mentioned before, reach out to me. We can have this income calculated. We can average these bank statements and have this calculated within an hour for you. We got to make sure we use the appropriate expense ratio to determine your true qualifying income before you really, get approved and out home searching. Okay, so I want you guys as business owners to plan accordingly. Reach out to me. I want to help you guys get out in the market in success and utilize a program like this as opposed to a conventional loan. So higher expense ratios could ultimately mean you'll need larger deposits and more deposits to qualify for that same loan amount. So if we use a lower expense ratio, this can allow you to qualify for more. So that's it, guys. I appreciate you watching. Ultimately, I'm going to dive deeper into this. We do have different investors that utilize different financial pictures, different expense ratios depending on your business. Give me a like, subscribe to my channel if you'd like more videos like this. I'm going to continue to put out at least one video a week. Thank you guys so much for watching.